You're watching Market View. I am Natsila Sitole and welcome to the program. The construction sector remains one of the country's most important economic drivers, although Eswatini's infrastructure ambitions are running into a harsh economic reality and payment delays to contractors have emerged as concerns affecting project delivery, business survival and jobs across the construction value chain. Additionally, there are issues surrounding local participation in major projects, with the Construction Industry Council enforcing at least 30% local involvement. Against this backdrop, the Council's 2026 Stakeholder Forum has brought together government, the private sector and industry leaders, placing some of the most pressing development questions on the agenda. The Chief Executive Officer of the Construction Industry Council, Maqhawe Mnisi, will share with us some of the solutions that emerged from this engagement. But first, our business stories. And moving on to our business news, 100,000 foot and mouth disease vaccines have arrived in the country, delivering a major boost to the national vaccination program after previous supply interruptions. The Principal Secretary in the Ministry of Agriculture, Sidney Smelane, confirmed the development after we sought an update on progress following the halt of beef exports caused by last year's foot and mouth disease outbreak, which disrupted businesses and dealt a major blow to operators in the sector.
The Principal Secretary in the Ministry of Agriculture says the country has around 500,000 cattle, with 400,000 having so far been fully vaccinated with both the first and second doses. He says government had ordered 200,000 vaccines, of which 100,000 have already arrived, with the remaining doses expected this week.
Bese ode imjovo lengu 200,000 ukuthi basithumelele yona kuthandi ke ifikile le mijovo longu 100,000, and then next week sigatselo wesibili 100,000, and naye nasafika ke sesitawu sesiyacedzela kujova letinkomo lebetisele, and then nawubuka le nombolo le mijovo lesidzingako idouble letinkomo lesetisele. Sizathu ngilokuthi phela sibese siyabooster kunemjovo yokucala bese kuba nemjovo wesibili. Iprogram yokujova nje iyachubeka, sibuka kona kokuthi by the end of the week kutabe sesimendile about 50,000 wetinkomo. So ke sikhathi siyasivumela kahle ukuthi lo msebenzi siwufuce sihambe sifike nawo egcineni.
He further says government is committed to her promises and is on the right track in the fight against foot and mouth disease, with the aim of achieving an FMD-free status. This, he says, will enable the country to safely resume livestock exports while protecting the national herd. Reporting, Nelson Langamandla, Vuminkosi Nzinisa, Ezulwini.
FNB Eswatini announced that it has kept most of its business banking fees unchanged for the 2026-2027 financial year, despite rising business and operational costs in recent months. The bank stated that it had published its 2027 financial year pricing guide last week, featuring more than 100 free services, while retaining 62% of its pricing lines unchanged across both personal and business customers. FNB explains that for business customers, the bank had taken a customer-centric approach to its annual pricing review by keeping key pricing lines, including merchant services fees, unchanged. As a result, business customers would continue to benefit from the same rates for renting and using the bank's BidPoint devices. In a press release, Chantal Littler, executive head of commercial banking, said that the decision reflected the bank's commitment to supporting business growth through safe, convenient and affordable payment solutions. She explained that as the preferred banking partner for small and medium enterprises in Eswatini, the bank understood the importance of providing businesses with convenient and cost-effective ways to accept payments. She added that by maintaining all merchant services fees at their current levels, the bank was helping SMEs manage their operating costs while enabling them to focus on growth and expansion in the new financial year. She further said that the bank remained committed to empowering businesses with solutions that would support their long-term success and financial sustainability. Littler further stated that beyond pricing, the bank was strengthening its commitment to helping businesses grow in Eswatini, particularly SMEs. She said that the bank was pleased to be entering the final stages of the Entrepreneur of the Year Awards Air 2026, which she described as one of the many platforms through which the bank intentionally invested in local SMEs. The bank also announced that it had kept its foreign currency transfer costs unchanged. Ms. Dlamini, executive head of corporate and investment banking at FNB, said that the decision was one of the bank's responses to an increasingly volatile global business environment. The bank further stated that in March, it had brought together industry leaders, clients, regulators and economists for its first ever Forex and Trade Solutions Seminar held under the theme Beyond Volatility, Strategic Forex and Trade Solutions for a Fragmenting World. The seminar was held to explore how businesses could adapt to changing global dynamics. And you're up to date with some of the latest in business. After the break, we speak to Chief Executive Officer of the Construction Industry Council. Stay tuned.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Welcome back, and moving on to the program, the Construction Industry Council held its stakeholder forum on Monday at Happy Valley, where the future of the country's construction sector took center stage. A key issue raised during the forum was the Construction Association's call for local companies to receive a fair share of national development projects. The forum also revisited long-standing concerns about the need to strengthen industry standards, building technical capacity, and ensure local contractors are positioned to compete for major infrastructure projects. As government and development partners embark on mega developments, the question now is not just whether opportunities exist, but whether the local construction sector is ready to meet the demands of these projects. Now, to unpack the key resolutions of the forum and to discuss the state of readiness of local construction companies, we are joined by the Chief Executive Officer of the Construction Industry Council, Maqhawe Mnisi. Mr. Mnisi, good afternoon. Thank you very much for your time. So the theme read said driving infrastructure investment for national development. And one of the major concerns is local businesses subcontracting way too often. What are some of the resolutions that emerged from the meeting that currently stand top of your list?
Okay. No, thank you for having me in this program. Yes, we did have a stakeholder forum for this year, which is an event we normally have on an annual basis. But of course, over time, we've seen quite a huge interest in this forum from different stakeholders. So we did have different representations, including we had the Minister of Public Works and Transport, we had Parliament, represented both the House of Senate, we had the Senate President and senators together with the members of Parliament from the House of Assembly. We also did have industry stakeholders from the different disciplines.
Often the challenges include, well, as you say, government was also a stakeholder, delayed payments. We also do have an issue of capacity. Just what are some of the resolutions or engagements that were brought up by especially businesses in the construction industry? What did they have to say?
Okay. Yeah, maybe highlight issues. I'll highlight 4 issues that were raised in the stakeholders. One is local participation. The second one is in terms of the standards that we use, standards of construction materials that are used when we are building. And then number 3 is in terms of the use of foreign skills in the local industry. And then 4 is in terms of procurement. So then maybe let me start with local participation. Local participation is an issue we have been deliberating as an industry over time. And our Act, CIC Act, really empowers us to regulate local participation and promote the local construction companies in projects that are used local, that are being done locally. So the issue was in terms of how are we ensuring that local participation really happens. So there are 2 issues when we are talking to how we need to ensure we are regulating effectively local participation. One, we have projects that are done by project owners using domestic funding, their own funding. And then we also have projects that are done particularly by government, that government sources funding from international financial institutions, whom also have their own requirements, or what I would call eligibility criteria. So in terms of the local participation, I think clarity was given, especially from the government perspective, that our contractors are actually participating and they are prioritized, whereby, for example, government is doing construction works at a small scale, for example, or using even the domestic finances, domestically sourced financing. You know, when we're now looking across all the sectors of the economy where construction activities is being done by government, Eswatini contractors are involved. The Ministry of Public Works and Transport, for example, is intentional about using Eswatini contractors as best as they can. Now, I believe the issue, by and large, is in terms of projects that are funded from international finance institutions. I believe that's where the issue mainly is, because the reason why government is sourcing funding from financial institutions is because of the cash flow challenges faced by government. You know, when you are looking at historically, we never had this problem of local participation on infrastructure projects, particularly those done by the government, because government used to have the money to source or to fund local projects. Now the tide has turned over time because of the cash flow challenges, which of course we all know about, that government faces. Now, government uses international banks such as AFDB and World Bank and other external financiers to fund local projects. These funders, what we have been made to understand over time is that these funders, as best as possible, they would like to use their local procurement processes when, for example, government wants to source funding from them and wants to award tenders. As best as possible, they do normally in any country. They want to prioritize the local procurement processes in ensuring that the money that they are releasing, or it's a loan, particularly for loans that they are releasing, gets to ensure that the construction is done by locals or let me say according to the local procurement procedures. Now, the problem we are finding ourselves with, what they then normally do, they do an assessment of these procurement procedures and processes locally, that are local. But where there are issues, or maybe, there are issues, they've got concerns here and there, then they opt for their own, what they call the bank procurement procedures, to ensure that whatever procurement process that has to happen in order for the work to be done, construction work to be done, and the money dispersed, it has to be dispersed according to clear, transparent, accountable, and of course there are a number of other factors they might also consider. Now the reality says, if, for example, the government of Eswatini wants to do a project, that relevant ministry will then take lead together with the Minister of Finance in terms of sourcing the funding. And the reality says it is that same ministry responsible for implementing that will lead the tender evaluations once the tender document has been issued. But the whole process has to be done in line with what the bank or the external funder has agreed, that we agree, project owner and us as a bank, to say this is the process we will take. These are the procurement processes and procedures we will follow. So normally then they have eligibility criteria to say, when you're doing the tender and awarding, these are the guidelines we will follow. I think that's where the issue is, because with these banks, they also have what we call eligibility criteria. Take, for instance, FDB. FDB, they, as best as possible, encourage that also we need to also consider international companies when we are doing tenders, or in what we call the tender then is not a domestic tender, but it becomes an internationally competitive bid once you issue the tender. So that basically says you have international companies also bidding, and they have to follow certain criteria. So in terms of these externally funded loans, the conditions definitely say you cannot then close that tender to international companies. Maybe then that's where then the issue is, to say you cannot then avoid involving international companies or foreign companies in those tenders. So the resolution from there, because then the question says, how best can we then ensure that the local companies are in a position to compete effectively when tenders are issued, and then they get the best chance to participate. I mean, sorry, were you talking?
I ask on this one, with regards to participation, and the CIC's resolve right now is advocating for at least 30% of local participation. Not the biggest figure, but it's a good start. How exactly do you see it being enforced?
We are already enforcing 30% participation for local projects because our act is clear that there needs to be local participation. We've got a number of projects that are now currently going on, major projects that are evidence that 30% is there. Then the question says, and it's a question then that is asked by stakeholders to say, if, for example, 30% there's an agreement that says there'll be a 30% participation, how are we ensuring that that is enforced? So as a council, we have inspectors going around construction sites who are always monitoring implementation of that requirement. 1, 2, as a council, we are now engaging project owners well in advance before projects commence to ensure that we are informed as a council what the project is all about and what will it entail. And then further to that, we do now encourage our project owners to also sit down with us and industry to discuss that project, so that our local project or our local contractors understand what projects are all about, so that by the time that the tender is issued, they are well prepared to compete effectively for those tenders. So let me just highlight those two.
CEO, because of time, we'll have to leave it here. Thank you very much for talking to us. That was CEO of the Construction Industry Council, Maqhawe Mnisi, talking to us about some of the resolutions and challenges that were brought up by contractors and rather businesses under the construction sector. Following that, the council did host its 2026 stakeholders indaba or forum rather.
Those that are in pain must forget all the problems they have. Because the things of the earth have got no answer. But the answer that we have is all morning. When I'm preaching here, I'm preaching to myself. I receive the Holy Spirit.
I declare a turnaround is coming my way.
Turnaround is coming in my life.
Welcome back. And for market insights, in-house economist and analyst Sibiya is on standby virtually. Mr. Sibiya, good afternoon. Pleasure talking to you. Second trading day for the week. Allow me to ask you on this one. OPEC Plus has announced an increase in oil production. And of course, considering the need to balance supply and demand, what impact could this have on energy markets?
Thank you, Notsile. Good afternoon to you, and also good afternoon to the viewer. So we expect that as we go into the month of July and into early August, as we see this upward adjustment in output, we should expect to see the price of Brent crude oil, stabilizing and really just fast-tracking its return to that pre-war level, that $65 per barrel mark. But it has to be stated that we don't expect those rapid increases to come in effectively as one would have expected in a situation where we are not seeing any post-war kind of movements. But we do expect that supply chains are to be expected to readjust and shift up to that full equilibrium then. So we should expect that another adjustment in prices, into the month of August and probably September. But overall, Markets are relatively showing us a mixed move in today's trading market, in today's trade, with the U.S. Markets, showing signs of, some strengthening and bullish tendencies there after the long weekend. And this is actually in reaction to that NFP data that came in just before the long weekend. And we're seeing traders are really just taking it into stride, the fact that we're seeing, cooling off in the labor markets, which somehow is going to minimize the need for the Federal Reserve Bank to actually up those interest rates. So we're seeing markets are doing relatively well on that front, with the Dow Jones Industrial Average up 155 points, the Nasdaq Composite Index up 288 points, and the S&P 500 up 54 points. But we're seeing a return in terms of those worries around AI fears, as the futures markets somehow signaling. But overall, trade closed on an upbeat note in the US. And then moving into the European markets, starting with London, the FTSE 100 is up 41 points. The German DAX is down 136 points. And the CAC 40 in France is up 22 points. So I was seeing the dip, driving the dip in Germany, there is those issues to deal with the fuel tax that was somewhat uplifted to make room for that skyrocketed fuel during the war. It came to an end last week, and so now markets are trying to readjust to those movements that we are seeing in Germany. And then overall, all eyes are on the NATO conference, and then also we are waiting to see the judgment around Marine Le Pen and her ability to run for office next year in France. So now those are the main movers of the markets within the European landscape. And then coming into the Asian region, so Asia is showing signs of already pricing in those worries and around AI-related stocks. We're seeing this happening in Japan, with the Nikkei down 1,480 points in today's trade to sit on the 68,000 mark. The Hang Seng in Hong Kong is down 119 points, and the Shanghai Composite Index in the mainland is down 51 points, back below the 4,000 mark. So now there's a couple of issues that we're seeing. Japan, they said that the Bank of Japan becoming more hawkish around its monetary trajectory, while in Hong Kong and in Shanghai we are still seeing that property bubble there still being managed, and then also the downward revision of growth numbers that came from the World Bank, with the Chinese economy expected to grow below that 5% mark. And we know that we haven't seen that in a very long time, and it is quite a stress point for markets. And we are waiting to see what kind of stimulus is going to come out of the mainland. And then coming into Johannesburg, the Johannesburg Stock Exchange lost 418 points in today's trade, largely driven by that cooling off of the commodity space. We're seeing the miners are really just taking a bit of a cooling off, and that we know the Johannesburg Stock Exchange is a commodity heavy index there. And then coming into Eswatini, we've not seen any changes. We're still sitting on the 501.25 in terms of overall show volumes. In price of gold, we're seeing gold coming down 19.5 points in today's trade, still above the 4,000 mark, and we're seeing gold really just maintaining the 4,000 mark for the longer period of time. But we see the cooling off of inflation and the expectations of interest rates in the US. Now that is what we are seeing driving the price of gold and maintaining it at that level. In terms of Brent crude oil, Brent crude is up 0.68 points in today's trade, driven by the European summer and the fact that we are still waiting for overall markets to really re-establish fully in the Middle East. And in terms of the Langeni, we are in a relative weaker zone today, against the dollar trading at 16.24, weaker against the euro trading at 18.56, and also weaker against the Japanese yen trading at 9.98. Not just given those being pulled down by that commodity rally cooling, and also overall strength of the global northern currencies. Thank you, Natsile.
Mr. Spear, there was economist Sanele Sibia coming through with the market analysis. This has been Market View from myself and the team. Let's meet again next time. Thank you for your company. Goodbye.